Hey everybody, what's going on? I am Jen.
And I'm Adam.
And we are back with another market update. Okay, Adam, we did get a little bit of good news on Friday morning as a drug. There was a study that one drug has been showing significant effects in a positive way, helping people heal from severe symptoms of the COVID-19 coronavirus. So that's a really nice bit of great news in a week that was overall pretty negative.
Yeah, Jen, this week was tough. If you were tracking headlines in the market this week, it was not a good week. I mean, we had unemployment continues to go up. I mean, millions of Americans out of work. This is going to be some of the worst unemployment we've seen in a long time. The manufacturing numbers were not good this week. And then on top of that, we had the small business payment protection program tapped out of its funds. So there's no more money for that program for small businesses, which now puts, eyes back on the government of, where else can we find relief for folks who are in these struggling situations.
Yeah.
The silver lining though, Jen, in what was a tough week is, like you said, there is some promise on treatment. And then number two, if you are in the mortgage market, if you're in real estate or in mortgages, all of this news adds up to the government continuing to support the mortgage industry, drive down the cost of borrowing money. And so interest rates are really low.
They're extremely low. According to Freddie Mac, this week, the average for a 30-year fixed rate mortgage is 3.31. That's incredible. And depending on your situation and what kind of loan you're going for, you could even get below that, guys. So make sure you're talking to your loan officers. Now, there are really two types of refis that are probably going to be pretty good for you right now, something to talk about. One, simply improving your rate, improve your interest rate. So if you bought a house like even in 2019 or earlier, and you're thinking, hey, maybe I could save some money over the long term, this is a really good time to call your loan officer and say, hey, this is a great, process for me. Is this going to be right for me? Is this something I should look into? And they'll help you work out the details. And there's another way you can do it, Adam, that might actually help you out in an emergency.
This is one that's really popular for folks who are wanting to reinvest into their home, maybe do a remodeling project. It's a cash out refi, right? Mm-hmm. If you've been in your home for a while and you have a lot of equity, that's your money that you're sitting on in your home. And so, it's not for everybody, but it's something that you should think about. You should ask a loan officer, talk to a financial advisor and say, hey, should I tap into my equity? Is now the time to take some cash to make some investments? Or frankly, if you've been one of the folks affected by this, that could be a lifeline for you. I mean, that could be a little bit of money to help stabilize your small business or your family as we go through this tough time. So Jen, you hit the nail on the head. Rates are down almost a full percentage point when you look at averages. From a year ago, everybody's situation is different. So we can't make a prediction about an individual interest rate, but on average, things are way down from where they were even just a year ago. So call a movement mortgage loan officer, ask about cash out refi or lowering your rate. Either one might be a good idea at this point in time.
Right. And if you do want to read up on what's happening in the market right now and what's going on with the economy, you can read all about it right now on movement.com/blog inside the latest market update.